Hey, what's happening, everybody? 10 a.m. on a Tuesday. We're on day 2 of the upgrade to the general rental business financial model. Let's get the link out real quick. See, it should be here. Test, 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 test. How do I test? Put this test. Okay, sounds good. So don't forget, I've been upgrading all of the financial models on smartly.com. We are almost through the top, uh, all the startup models that are within the top 50 template sales. We are right here. Tangible good rental financial model. We have a couple left. Janitorial cleaning services, enterprise SaaS, lending business already has one, and then we'll keep working down. But the model we're doing today is part of the industry specific financial model bundle. You can also buy it separately. It's right here. It's a mid-level template. Um, so we're doing this one right now, getting the upgrade, getting the three-statement model in there, all that. And keep in mind, you can find all kinds of different templates at smarthelping.com, stuff for lending, HR tools, accounting, industry-specific, inventory, real estate, joint venture, cash flow waterfalls, a lot of SaaS models. I've done a lot of SaaS stuff. And then obviously you can see all the templates here. Color code key for the different levels, which just really has to do with pricing. And then you can buy in bulk by those levels if you want, or you can buy all templates on the site for $9.99. Alrighty, let's get down into it. By the way, I am very hungry and I didn't get food, so this might be a quick stream. Um, okay. So we left off yesterday with a lot of work on the capex because we had to extend all this down, 178 rows because of the dynamic purchase schedule that's super granular. You basically can plan out the purchases of different things that you're going to rent out in up to 25 categories, and each category has up to 7 purchase rounds. We can define the date, the cost per unit, total units purchased. So so the nice thing about this model is all the logic was great. That was already in here, so we don't have to update any of that. It's just a matter of putting it into more formal financial statements. So we have the monthly detail, which we're going to pull from. If we look at our income statement, I've already set the revenue properly. Cost of goods sold. I don't believe there is any. Let's see. Did we put logic in here for cost of goods sold? No. Where's our cost assumptions? Also, we'll remove all of this is irrelevant now. Yeah, these are all G&A. Okay, so no cost of goods sold directly. Um, so yeah, this section is gonna be replaced. This section is gone. It'll be different. This is not relevant. What else we got going on here? Depreciation will have dynamically. So yeah, this is no longer relevant. All of this is going to be on the income statement, so we don't need it here. All we're really going to care about is cash flow on this tab. Don't need any of this. Alrighty, so that's good. Make sure this is right. We might need to update this calc. Monthly depreciation should be, yep, okay, yeah, 10 divided by the useful life gives you, and divided by 12 will give you the monthly, yep. Okay, so that looks good. Curious here on the depreciation matrix. Where do we have this? This is units return, cost, utilization. Where is, oh, hold on, here we go. Depreciation. So we did age here, percentage here, book value. We'll have all this already. It's already going to be dynamic. Just curious. Ah, here we go. I want to make sure I'm matching up. So I did it on this, and this is why I want to check my CapEx schedule. So here we're saying depreciation is actually quite a bit more in period one. We've got 12 cents, which I have, but then we've also got $1.07, $1.33 on these two items. So that's category one, purchase 6 and 7. Okay, $1.07, and then category one here, $1.33. Start date Jan 2021. Jan 2021. What's my start date here? Maybe I need to update this. No, 2021. So if I go to my income statement, I have here, I just want to make sure these are in here. 6, okay, yeah, it is $1.07, $1.33. Okay, good. So this should be mirroring that, and then we obviously have the building up front. Okay, good. Now it does stink because I did do all this depreciation logic and we're not going to need any of this, but the model is going to be lighter, which is good. So yeah, we don't need any of this because it's already going to be in the other stuff. So we can delete all of this. And we need all this other, these other tabs though. All right, so we got our depreciation. I think this is good for now. Income statement. Oh wait, no. Running costs. So let's get our costs in here. So I have split this into OpEx, sales and marketing, G&A, R&D, and other, which can be, this is also G&A. Okay, so we got those three, and then we'll have startup costs. So let's go general and administrative, sales and marketing, research and development, startup costs. So general and administrative is actually going to be 2. It's going to be this section and this. Sales and marketing here. R&D here. And then startup costs. What's that? Okay, good. Let's summing up everything. Let's drag this over. So that's good. EBITDA, interest. Make sure the annual tab matches. Sum net income minus sum of this net income should be 0. Okay, we're out. Oh, probably because we didn't do this. Perfect. Okay, so that's 0. That's good. Now we will check all this against the monthly details as well to make sure we're not missing anything. Just make this a lower number for now. Okay, good. Good. Let's move on to the cash flow. Customer receipts is just the income. 10. So this is cash flow from operating activities. We have that. We have OpEx. So here 25 and 15. Okay. Yep, that works. Interest, taxes, and we don't have anything else. CapEx 178 looks like that is updated. Let's make sure 178 is the row. Yep. So we got CapEx, sale to business, sale to depreciable assets. Looks good. Borrowing of long-term debt. Okay, and then this sale company's not going to have to get too. Well, I guess we can add it now. So if we go to the monthly detail, let's try and get all these other things in here. So startup cost is going to be any of these items. Nice. So that was lined up. Good. All of this. All right. CapEx. So 257 and 274 we can delete. 57 to 74. Okay, and then now let's add up everything. We can delete this too. So 30 to 35. All right. Now we can do what I do a net terminal value here. Did I do a selling cost? What was the idea here? C9. Oh, it's just different logic now. Okay, so yeah, let's clear all this out. Clear all this. Clear. Clear. Okay, so added things that are not in here. Taxes, CapEx, sales proceeds, or exit proceeds. Taxes, CapEx, exit proceeds. We have the interest and principal, startup costs, anything else. Then we're going to use this cash flow in the monthly detail to figure out the actual cash or minimum equity required to run the operation. Pull this up here. All right. So we have taxes, this, that. Okay, I think that's everything. So let's pull that in. So we'll pull it right off the cash flow. Tax, CapEx, exit proceeds is this plus this. Oh, shoot. And this needs to be in period 1. Convert this to regular currency. All right, now my actual cash flow is simply EBITDA. There's no non-cash items in EBITDA. It's just revenue and expenses in the same period minus startup costs. And then taxes are going to come through as a negative, so we can add that. Same with CapEx, and then add that. Now our check is going to be the balance sheet. Cash should solve for 0 balance, so we'll see if that is true when we're all done here. Okay, so 250, that'll be the same. There's our check on this. It's just total cumulative cash flow. And we're out by 24 million. A little bit. All right, we don't need this. We don't need this. Clear this out. We don't need this either. We're doing different. We don't need any of this. Now here's the interesting one. Net units in storage. We will keep that. That's a good calc. So it's saying over time, what's is saying what's the total units fully rented out against the total rentable units. So based on whatever your utilization is, this is the total units you could possibly rent out. And this is the actual units rented out based on utilization. So here it's only 10%. So you have the difference would be in your storage or essentially inventory. If your utilization was higher here, like let's say it was this the whole time, you see now your units in storage is a bit less. And your ending cash flow 52 million is a bit higher because you're obviously renting out more. So it's 52 there. Now it's 46. Not a ton, but okay. Annual. This needs to sum up the monthly. Oh, there we go. So we are all matched up there. Perfect. That's all I want is a good cash flow number. 58 to 69. I'll delete. And it wasn't on here, that's fine. We have some errors, probably in the visualizations, I imagine. We'll get to that. So 59, 56, or 56, okay, good. Now, our cap table should solve for the minimum equity required, which is just the minimum cash position. C16. So this has got to be minimum of row 256. So we need $3 million to get this thing off the ground and never go below a $0 cash position. Now, if we go to cap table, that number pops in here. You get to find who's actually paying for that and how much equity they get, as well as how much equity the owners are having in this lower section. If we go to balance sheet, this should solve for 0 at some point. So we're probably off somewhere if it doesn't, which it does not. We are balanced though. Let's hide these because it's just so many rows. Data group. Group. Now we could just minimize that, make it easier to figure out what's going on. All right, so this cash balance needs to be 0. Debt proceeds, is that in here? Nope. Okay, that could be it. So let's add debt proceeds. Debt repayment we don't need. That's actually going to be in the amortization schedule. You can see here that's a repayment because it's improved logic in the new version that I'm doing here. We do need the funding amount though. Annual detail needs to also do the same calc plus that, and we don't need this row. All right. Still not 0. We're close here. But we are missing something. So if I go, so see if I do, let's do cash flow period here, and let's go to the cash flow statement here minus the equity. Oh, wait. Oh, wait, did that change because I changed it? Okay, so it's 278 because I changed it for debt funding to be included. We are off somewhere though, so we're gonna figure this out. Difference here, 1,266. Debt service. Okay, so either it's counted twice somewhere or not counted somewhere. Because it should be counted in here and here. What about on this? Oh, shoot. Oh my goodness. All right, we actually forgot. So minus debt service. Now we should be good. Yep. Okay, that was the difference. And this is what I mean by feeling really confident about or the reason why I'm matching the income statement up with the monthly and annual details, so we make sure everything is accounting for the same stuff, even though we're reporting it a little bit differently or different style. There we go. That's what I needed, 0. So cash balance solves for 0. That's good. Obviously, we balance assets equal liability plus owner's equity. Perfect. Okay, that's good. So I trust the monthly and annual details. We've got to add this into the annual as well because these match now. So that's good. Distributions. So we need to be summing up 255, which we are. Equity. So this is wrong. We got to update it. This is going to be negative. Total equity, this number. And this will be the same. 73. Oh yeah, and then percentage for investors is going to be based on the cap table, but it can be shown here. Okay. And this is going to be here. Contributions from owners. There we go. So true, checks true. We have our discounted cash flow analysis looking good. Now I will check. So let's see if we sum up this, we get 44,417. That should be our total ending balance. $47,224. Okay. What are we missing here? One, less than 0. Okay, what is this? This calc here is not right. So remaining equity should just be the total contributed, this, plus anything else in year 0. So plus debt funding minus startup costs. And that's everything. Okay, now that's looking better. So if I sum this up, I'm at 46,624. 46,624, there's my match. Okay, perfect. So there's a project discounted cash flow analysis. Here's the investor side. Here's the owner side. And then the cap table, assuming it's all referencing correctly, should match. So 48.5 on the aggregate and 344. 48.5. I think that's right. Let's give it a decimal. Yep. And then 344.3. Good. So that's all good and matching. And you can see by entity as well, they'll be based on their contributions and relative share of the profits. All right. Executive summary. What has happened here? So equity required equals, for the project, it would be this. Investors would be that. And owners are going to go here. Everything else I think is good. See, 9, 16, 24. Yeah, okay. And then up here we have revenue, net income. We're not going to show. We're just going to do EBITDA and cash flow. I will have debt service coverage, though. That'll be based on total debt service. Okay, other cash flow items. So what did I do here? Total purchases. And are we including, hold on, EBITDA, OpEx. Yes, so that's CapEx. So this CapEx number here is this, replacing this. And it's the same except for, let's see if I zero out the building. Let's say there's no building. Okay. If I go over to the annual detail now, you can see 7, 7, 28, 16, 14 matches 7, 7, 28, 16, 14, 12, 6, 6, 8. Okay, so that's in there. That's fine. Let's go back here. All right, so this is actually going to be, we're just going to call this CapEx. Debt service is fine. That's fine. We have taxes, exit proceeds, startup costs, and these two we don't need. All right, CapEx looks like the right number, but just in case, let's just make it this. Debt service is fine. This is fine. Taxes. I'll make this negative. Exit proceeds. We'll go here plus that. Startup cost is good. All right, cash flow. So we go here, minus CapEx, minus debt service plus funding, minus taxes, plus this, minus this. Now, this minus annual detail, cash balance should match, which it does. That means we've calculated all items. It's good to see. Year end. What is this? F8. Total units. So essentially, yeah, that's good. So we'll call this total units available to rent. All right. Then revenues, gross profit, expenses, expenses, gross profit, or net EBITDA margin, debt service coverage, other items, cash flow, cumulative cash. Right. Okay. That's good. Nothing's broke here. Visualizations. Let's check these. So we got a lot. These look good now. Um, let's make sure there's no errors. Good. Utilization. Yep, that didn't change. That didn't change. That's good. That didn't change. Cash flow, none of this. Actually, that looks fine. Yep, that's right. Here's one, so we don't have this anymore. And that's it. Now, one of the cool charts here, this one, average rental revenue per month available versus rented, or available to rent versus rented. So this is your utilization difference. So this is, um, so this line is average monthly rental revenue per unit rented. And then this is average monthly rental revenue per available unit. So because this is higher, because you're not renting out everything. And this difference here is showing, when we get closer to 100% utilization, they become the same. But here, so the average monthly rental revenue per available unit is saying you're actually only making $251 per unit you have. And since you're only utilizing some of those, you could be making $432 a unit if you were fully utilized. So here I'm making 259 on actual, like this is like what I'm collecting on units being rented out, and then the ones, if I include the one sitting there, my amount goes down. So technically, out of everything I bought, I'm only making this amount per month per unit, where it could be up to here if I was fully utilized. So that was a cool chart I did. I remember doing that, was a good one. Alrighty. Well, this is looking about done. We didn't mess too many things up. We got a lot of stuff updated. We kept all the base logic. Uh, I'll expand this back out as default. So you go in here, you put in your own figures, and create your financial forecast for 5 years for general rental business. What I still need to do is sanity checks. So let's look at that. Annual net income versus monthly. So we did this first thing the day. We just want to reference this, and our goal, or wait, that's going to be on the annual tab. Our goal is to have all zeros here, and then we'll adjust some of the assumptions, make sure everything's working. So annual net income versus monthly, balance sheet, is that right? 220. Yep. I'll check the balance sheet, monthly and annual. Annual detail check against monthly. Is this? And it's nice to have all your checks in one spot as well. Annual detail. Okay, so here we're taking the monthly cash balance on the balance sheet minus the cash here, and then against equity required. Perfect. Executive summary. This number against annual detail. We did that calc. Distributions should also match the annual detail here. Good. And then individual. This is the cap table check N57R59. Good. And all that matches. So there's your check to make sure everything is looking copacetic in the model. All these should be 0. Let's start adjusting some things. Let's say we had no debt. Looking good. Let's look at the debt real quick. Debt schedule, if I adjusted this to a different month. Good. Let's say I didn't include terminal value. Good. All right. Now let's start changing the date. Let's say, first of all, so no exit. No issue there. Let's say it's a partial end year. Oh, we have error. I haven't seen this in a while. Okay, so balance sheet annual. If we end partial, there is an issue. somewhere. 4870 is probably something with the CapEx schedule. So let's look here what happened. Oh, I bet you we're not summing up the oh no, we are summing up the whole thing. So a bit off here by 4870. Hmm. And the monthly is balanced. So is it something with these last 1, 2, 3, 4, 5, 4 or 5 months probably? What's our index formula doing? Index 211, balance sheet 5, match it with 211. That's fine. So this is ending with a 40 million in retained earnings. 4173, that matches 1309 there, that matches 0 on the debt. 41478. Assets too high. Assets are too high. So cash is 41,482 here. Oh, 41,482. So that's fine. Wait, 41,482. How is that? And this is 41,478. Which is just taking the cash. Hold on, 41,482. Ah, okay, so this cash balance here is not right. 41,478, and we're actually 41,482. So what happened on the cash flow annual or monthly? Right here, CapEx. I knew it was something with the CapEx. So what this says is we've actually purchased 4 in the last 4 months, but we've ended the model before that. So that would not be a logical input because you're not going to buy stuff after you've closed the business, obviously. So let's fix that. Uh, just to make sure this is right. So if we go to the rental schedule here, we'll just make all these. Well, actually, it's going to be the same issue for the previous year. So let's try to end everything at the latest at October 2024. This is 2023, 3, 4. Okay, that's fine, fine, fine. Okay. So go back here. We're good. Make sure that all's still working. Yes, no. Come back here. Mid-year, that's fixed. Fixed. Now if we go to the previous year, good. No error, no error. And then if we go, we can go all the way up to October. No error. Okay. Awesome. So that's all the timing checks. That's always the biggest issue. And everything else should be good. You go in here, you create your purchase schedule that'll start driving rent, create your utilization schedule, your rental fees, average working days per month, and everything will populate. There's even on this model I did a loss rate, so that's saying like your what you buy, it's likely that eventually it will degrade and not be able to be used anymore. So this percentage here defines how each unit um, depletes over time as far as what it can be, its earnings power basically. So we're good here. I'm happy with this. Everything, all this logic is nice intact. Um, Remember, you can get it at smarthelping.com. It's only a $45 one-time fee. Where is it? Industry specific, and then this is newer one, general rental. So here. So I'll post the update review video tomorrow on this, and it'll be ready to go. I'll update it across any vendor sites I have it listed at as well. But really happy with this one. It's a great model. It's really really for any rental business that's just buying things like furniture, equipment, party supplies, whatever, and then renting that out over time. This is a good on like month to month basis. This is a good model. A lot of granularity here, and uh, I think it's the value here for $45 is crazy. And keep in mind, you can buy in bulk if you want 5 mid-level templates, only $119. So you can pick any template that's listed as mid-level, up to 5 of them for that price, or 10 of them for $249, or all the mid-levels for $499. This is honestly the best value on the site is probably that all mid-level templates for $499 because there's probably over like 100 of them, which is giving you $4,000 of value and 500 bucks. And then, I mean, besides that, if you want everything, so all the other intermediate, upper tier, and ultra templates, you're paying an extra 500 bucks roughly, and you get everything on the site. So I will see you guys. So what I'm planning on the rest of the week is tomorrow overview video for what I just did will be like a 8 to 10 minute video explaining the new version of the general rental model. And then Thursday, Friday, I might try and figure out a new financial calculator or like 1-2 pager template to build. I will be looking for suggestions on that, and we'll see how it goes. Alrighty, don't forget to subscribe, like the video, and I'll see you guys.